Fintech Chatter, brought to you by Tier 1 People, leaders in Fintech executive search. Welcome to Fintech Chatter, the show where I connect with Fintech leaders and share their stories and insights on leading, hiring, raising capital, scaling the business, and of course, a bit of chat. I'm your host, Dexter Cousins. And in 2022, we're showcasing Australia's next wave of fintech entrepreneurs. You can show your support by watching Fintech Chatter TV on YouTube and hitting subscribe and like. Or if you prefer podcasts, please leave us a 5-star review. It really helps in promoting the show to others in the fintech community. Now, here's a few words from today's guest.
Hi, I'm Dickinson, the founder and CEO of BetaCarbon. BetaCarbon's here to move the needle on the environment. It's here to do that through incentivizing the price that we pay to pollute in this country. Australia has one of the lowest priced compliance carbon markets in the world, and BetaCarbon is here to create access to that market so that we can properly price pollution, disincentivize emissions, and help everyone have the call to action to help their own journey towards net zero.
Well, Guy, welcome to Fintech Chatter.
Thanks, Dexter. Great to be here.
It's awesome to have you with us, Guy, and I'm really I'm delighted actually to have you on the show. I made a commitment earlier this year that we wanted to feature the next wave of Aussie fintech innovation. And when I first heard about BetaCarbon, even though it's still fairly early stage, I was really excited that we'd have a fintech on the show who actually is, in all intent and purpose, there to make the world a better place. So I wondered if you could share with our viewers and our listeners a little bit more about BetaCarbon and what you're here to do.
Sure. So look, let me start with my journey to found the company. It's probably the right place to start.
Don't go too far back, mate.
It's traditional banking, but we found that access to the Australian carbon market was extremely difficult, to the point of people simply not accessing it. At the time of us founding the company with my son in the middle of last year, there was only about 54 active market players in the carbon market. And when you think about how many people pollute in this world, it was pretty clear that we needed to open that access up. So BetaCarbon looked at it from the point of view of, to start with, it was more around corporate access, which is also diabolically difficult. The margins that are being paid by these corporates is extremely high. And then when you move on to the retail call to action that people as consumers have to access, the fees are exorbitant to the point of almost being egregious. And I took exception to that. And that's why BetaCarbon was formed, to create a call to action and truly show what the cost of pollution is for the big companies so that we can drive that cost up. And also drive more value back into the environment, because every piece of margin that has going to those traditional incumbents is money which isn't going towards decarbonisation of the planet.
So when I pay for a flight and I think, hey, I'm given $10 to plant some trees, it's not necessarily planting $10 worth of trees. Is that right?
I think that there's different ways of doing it. An offset is you giving a donation. My premise is that while it might make you feel warm and fuzzy to think about it, most people don't do it behind closed doors. So when we think about climate action in terms of philanthropy, it's not very effective. Climate action in terms of investing changes the game. And that's what BetaCarbon's been able to do with our structure.
So can you tell me a little bit about, because it's using tokenization, blockchain technology, what's the kind of premise then behind how this would work for a consumer or somebody like myself who wants to actually have an impact when they're actually deciding that they want to offset their carbon footprint?
Sure. So I'll step back for a second again and say, so when you buy BetaCarbon, you're not naturally offsetting at the first point of purchase. So when you purchase BetaCarbon, you are buying a fraction of a carbon or fraction of participation in a carbon credit. That carbon credit today costs around $35. If you think about what that means, when I chop it up into 1,000 pieces, it's 3.5 cents per kilogram. we're seeing examples of the moment where some offsetting companies are charging up to $1 for the same kilogram of carbon. Now, that's 30 times more than the cost of carbon. And I think when we stepped back from this, if I took you on the example of, if you wanted to look at it differently, Dexter, and say, well, I'm going to go on a flight, I'm going to spend $10 to offset it, or I could spend $10 taking that same carbon credit out of the general supply by buying BetaCarbon. What you've done is you've taken that permission to pollute, which is what a carbon credit is. It's permission to pollute. You've taken that away from a big corporate. Now, that big corporate polluter now needs to find another carbon credit somewhere else. Now, that will naturally drive up the price. So what you've done is, to make an offset, you need to have a carbon credit, and then you destroy that carbon credit. And when you destroy that carbon credit, you're destroying the value in kind. Our premise is that you don't have to do that. As long as you own it in perpetuity, it effectively will take that supply out of the market in perpetuity. Now, this is the beauty of community. Now, community will drive that participation, whereby, Dexter, you may sell it to your friend, and while he holds it, a big corporate polluter can't use it to pollute. So there's an element of community to this, but there's also an element of remembering what a carbon credit is there to do. It is a transition tool for climate change. So if you look at some corporates, they really want to do the right thing. You've got examples, but MJ Bale, for instance, they're carbon neutral now. So they've gone out of their way to offset all their primary production on scope 1, 2, and 3. Fantastic. They're the types of corporates that we want to play with. Now, when you look at what they're doing as opposed to others who, you may have a large petrol company who is offsetting their office and they're saying they're carbon neutral. Well, I don't buy that. I think you're not really playing the game here. But the actual institutional setup allows them to do it. So by all means, do it. Now, BetaCarbon will allow companies that we believe are doing the right thing around environment to take that carbon token and bring it back to us, and then we will be able to retire that carbon credit and give them the same piece of security that says that they've offset that carbon for big corporates. As an individual, we love the idea that you can hold it in perpetuity. We love the idea that the price will now probably appreciate. If you look at what the landscape of this looks like, over 50% of the ASX has some form of neutrality. None of them have bought carbon yet. They haven't even entered the market. So when you think about the rarity of supply in this space, the entire asset class over the next 10 years is close to $2 to $3 billion of supply. Over 10 years, Dexter, that is like tiny. So the actual supply that we're talking about here from a transitional product perspective for the entire $1 trillion economy, now $1 trillion in a month, it's actually really tiny. So the investment proposition that BetaCarbon gives you as an individual is kind of quite compelling.
Yeah. So can you talk me through a green wallet and what that is? I'd watched you kind of, did some research on the website. How does that work? Is it like any other digital wallet or?
So we obviously understood the beauty of the cryptocurrency frameworks is that it's a fantastic rail to distribute peer-to-peer, also through centralized exchanges, decentralized exchanges. So when we looked at what the green wallet is, it will be your BetaCarbon wallet within our exchange, which is currently being built and due for launch in the next 4 to 6 weeks. And what that exchange will be is, it's like any digital currency exchange. We're a registered digital currency exchange with Austrac. And within that, we will have what is a very simple platform. You'll be able to exchange your Australian dollars for BetaCarbon, or BetaCarbon back to Australian dollars. So what we're really talking about here is engendering a whole new bunch of people who've never traded crypto or carbon, but they've sat on. Everyone knows about crypto. I mean, you'd have to be absolutely living under a rock to not know about it. And I reckon most people are pretty close to having a little tickle at it. And we can see that with the engagement in numbers with some of the bigger exchanges. But we also know that it's fairly complex. If you start digging into it, it gets confusing. We wanted to take that away. So your green wallet should feel more like a shopping cart. Now, everyone knows how to shop. Everyone knows how to shop online since COVID. So we've tried to really create our exchange to be simply more like buying a T-shirt. Yes, there's an initial onboarding that will occur. Once you've done that, we love the idea that you will end up either purchasing these carbon tokens for yourself, or that merchants will reward you with them for the way you purchase with their stores. We're in discussions with several large merchants around the fact that they want to reward their clients for the way they purchase. Be that, if they had a particular sustainable product in their cart and you bought it, they'll reward you with BetaCarbon, which further creates that butterfly effect, which you probably already also would have seen on the website, which is it goes back to that purpose that for a limited supply of carbon permissions to pollute, the more we take out, the higher the price will go. The higher the price will go, the harder it is to emit, and the more that technology, and this is the real kicker here, technology can respond to climate change, but it can't do it at $35. That's for sure.
One of the criticisms that always gets thrown at cryptocurrency is the amount of energy that it uses per transaction. How are you overcoming that issue, if indeed it is an issue? Because there's a lot of different conflicting kind of hypotheses around this.
Yeah, look, and I think should we say that the incumbent industry, financial industry, has been very good at perpetuating that narrative. I think it's time for us to all move on a little bit from it. However, we can address it now. It's absolutely no problem. So if we look at the Ethereum network, it does use energy. It does use a lot of energy at the moment, and that's due to popularity. Now, anything that's popular comes with heat and light and energy. However, the Ethereum Foundation's been very clued onto this, and for the last 2 years been working towards the Ethereum merge to Ethereum 2.0, and that will their stated reductions are close to 99.9%. Now, when you think about how BetaCarbon is also going to sell its product, it's going to be doing it in a centralized exchange, which is off chain. So again, as soon as you're dealing in our world, in the BetaCarbon world, energy, the whole energy narrative goes out the door. It's not on chain, therefore it's not doing block checks, therefore it's not using that energy. So it's more like a Visa transaction. These things are extremely scalable. We were always very clear that the Australian Carbon Credit Unit, which is issued, by a government entity, is an important asset class. And for us, security was the most important thing. We could have chosen Solana, we could have chosen a blockchain which is more efficient, but they've had a lot of issues with hacking. So when we think about this, my first issue was security, then it was energy, and we've addressed the energy by centralizing the exchange.
Right. So there's, I guess, a lot of hype in the crypto space around NFTs, and there's a lot of stuff that kind of doesn't really seem to be doing any good for the world other than getting the owner Lamborghini. What was it that kind of really prompted you to take? Because I think it's worth noting that, up until a year ago, you'd had a pretty successful career at HSBC and a very, very, what I'm assuming, a very comfortable position to be in, albeit I'm sure the role had its challenges. So what was it that kind of prompted you to give all of that up and go and take on something that, hey, look, this is kind of pioneering what you're doing?
So look, HSBC was fantastic for me. A great company. I lived and worked in 4 countries. My background was, trading, head of trading in Singapore, Hong Kong, Thailand, and Australia. Within that came the treasurer's role. So balance sheet and all the pieces that come with that, and all the probity. But I did always.
You sound like this. Sorry to interrupt, but you sound like the kind of perfect kind of profile of somebody who would be anti-crypto and blockchain, not going out and actually creating a business in that space.
Yeah, look, I think I've got to give some credit to HSBC for the fact that it allowed me to be in front of all these corporate treasurers who were talking about carbon. So, I got a sense of the where the rubber meets the road. They had great problems even working out how to trade it, and there was no resources to get them there. So I knew there was an issue because of that. But I'd always swum upstream at HSBC by being myself, coming up with wacky ideas, always being the guy who would speak up in the meeting. That was generally my nature, and I think everyone will attest to that. And look, for every time that's a benefit, it's also been a disadvantage, especially with a company like HSBC, who has been around for 150 years. They know exactly what they are. They're not going to change because I want them to. And they'll continue being a fantastic company because of that. Now, if I start looking beyond what was important to me, I only resigned from HSBC 3 months ago. And I was there since 2003. It was a very long career, but again, it did allow me to understand where trading value came from. And this journey really started for me in noticing that a ton of carbon had a $2 price and it had a $140 price. And to me, that was a natural arbitrage market that I needed to investigate. So again, it's really, and you'd know this, Dexter, it's the lessons that you learn on the journey that lead you to a tipping point. And that tipping point for me was, I had a fantastic team. It was really hard to leave them, but it was time for me to build another one and build a team that was really, it was driven from a central need to do good. And when we stepped into this, we weren't trying to create a whole lot of heat and light day one. You know, there's other climate projects out there like ClimateOwl, which was really set around creating a whole FOMO. I'm trying to create something organically grown that is sustainable, that matches what we're trying to achieve in the transition journey. To pretend to be anything else would be disingenuous to not only the environment, but my customers and then me. And that's not what I want.
Were you kind of doing this as a side hustle, or is it now, are we at the point where technology is that advanced that you can build that quickly?
So look, my son started the company last year.
Right.
He was at university. It was his idea to come up with the crypto. Obviously, having a father who's been around for a long time, I can give good advice around that. But it was definitely clear that, you know, we were onto something here from an idea perspective. He did a fantastic job of holding the pieces together, bringing our, you know, our CTO in, creating some key engagements around that. And then naturally, I put my hand up at HSBC, you know, towards Q4, beginning of Q4 last year. It was clear at that point that where I was moving to. It was also clear that the bank, I was not competing with the bank, you know, that this was something different. And they saw it was something good. So it was a combination of getting some really good people in at the start to work with my son, Jules, and to really drive that. And we've found that our team, you know, we had a conversation just earlier about, you know, your hiring practices and Series A and it being more aligned to getting, you know, the real quality of person. But we've found that this project is endearing us to those sorts of people. You know, our last hire only a week ago, Matt Lowe from McKinsey, David Goddard, our COO, he's an ex-general manager at CBA. You're ending up with quality people who have expertise in their fields. And when you get those people early, you find that all those questions that come up around you being an incumbent banker, the questions get dissipated because I've surrounded myself with people who are not like me. They've lived the journey and different parts of it. So that's probably been the most interesting part of really the last 3 months, where I've taken full control and I've been able to hire people of a standard for our stage of the journey, which has been really thrilling for us.
Yeah. What do and working with your son, what's that like?
It's challenging. It's really challenging. You know, he's 19. He should be full time at uni, but he's kind of full time with me. And I think what's clear is he's 19 years old and I'm 47. So there's a balance between him being my colleague, him being my son. So it's really, you know, he sits in the business development side. He's looking at which countries at the moment we should be launching into next. You know, we're not going to solve this just in Australia, Dexter. This needs to be a global program. And within that, so he's working very closely on the compliance side. You know, he went through the whole Austrac journey on his own.
Oh, that's amazing.
He became the responsible manager at 19.
Can I just talk about this point, because I've been saying this, I think, for the last 5 or 6 years now. The next generation of talent, I've got people in my network who are 30, and they've done in the 10 years of their career, like they've accomplished way more than banking execs who are 30 odd years in the industry have accomplished. And it's remarkable to see just how quickly, one, they learn and they pick things up, but two, like this fearlessness that they've got of just gone out there and just doing it, right? Like there's no kind of, where's our generation, we're the same age, right? And it's like, I debate everything that I do. I overanalyze it, right? It's like, I'm always thinking about, what's the worst that can happen? And yet, I look at this generation coming through and they're just out there, right? And it blows my mind. Like, it blows my mind what they can accomplish.
But there's a balance to that too. Within working, specifically working with Jules, it's clear that I'm not the best manager for him.
Yeah.
I'm his dad.
Yeah, mate, I coached my 9-year-old at cricket, and it was, I think, it was the most challenging experience of my life.
Yeah. So what we've done is we've stuck, a fantastic. Another hire we got named Natalie Thompson. She's got background in AFMA, and she's a classic example. She's 27. She's worked at AFMA, she's worked at ASIC, she's worked at Westpac, she's done some great things there. She's come into us. She's the right type of manager for him. She's 27, she's relatable, she's got amazing process. I wouldn't call him a risk taker, but when he's got something that's got purpose, you can't stop him. No chance.
Yeah.
Their scruples become you can't break those things down once they're there. They're stubborn.
Yeah, and look,
they're stubborn around the good.
Yeah, and and as I keep reminding people, fintech, it's really complex to hire for, right? Because unlike other tech startups where you can follow the Facebook mantra of move fast and break things, if you move fast and break things in this environment, you're going to end up in front of the regulators and with a bear act, right? It's like you could end up in jail, never mind. Kind of just getting a slap on the wrist.
I was a bear at HSBC, so I know how that felt. And responsible manager, for our AFSL, which is in process at the moment. So look, we know how those things look. And I guess this is probably our advantage. It's our team. When you think about the fact we touch 3 or 4 regulators, we've got ASIC, we've got Clean Energy Regulator, you got ACCC. When we're talking about tokens which are backed by something, you may, and they're domestically priced. Who knows what regulator wants to put their hand up next? And we knew that was really important. And it's probably, on the one hand, you've got my son who was forming that company, but I put him in touch with Daniel Crennan, who's the deputy chair of ASIC. And said, this is something we're looking at doing. Would you like to be involved in that project? And now if you take the deputy chair of ASIC from only 6 months ago and put him in a project, you get meetings, you get people believe that you're going to do this the right way. We're not hiding in the basement. We want to be radically transparent is what we want to be, because we think that we don't have time to dilly-dally. That's true. But we definitely also can't conform to what the expectation of traditional finance looks like, because they're not up for it. Yeah, it is. Look, and I think it probably starts with the carbon credit market to start with. That's a highly regulated market in Australia. And we've seen a lot of movement only over the last month, with certain stories around, the quality of the credits and the price halved because the government moved away from owning the credits and allowing the private market to come in and buy them. I think what's important there, though, if I may, the first important point is no more credits. Credits have been created. It's just who's going to buy them, and this is where I have a belief.
So is it a bit like the kind of Bitcoin kind of concept of 21 million Bitcoins? That's it. Once they're gone, they're gone.
Well, there's absolutely that, but you can make a new carbon credit. But
right.
At the moment, from putting a project on paper to actually delivering a credit, somewhere between 3 and 3.5 years in this market. So it's not something which can just be magically, brought up. There's a new methodology on the carbon capture and storage, but it's really not a thing yet. There's a new one on blue carbon. No one's doing it yet. So you can create all these methodologies, but if people aren't signing up for it because they're not economically incentivized to do it, it's for naught. It's for zero. So when we're talked about, that side of the regulation, there is a lot of laws in the background. It's an important asset class. It's got great work to do. And actually, it's got the bedrock of a really good mechanism. Some of the other ETS schemes out there, they are literally magicked up credits, but people are forced into them. Whereas these carbon credits have actually done something additional. So already to start with, the carbon credit that we're talking about has done some good. whether it's 90% good or 110% good sometimes, it's done good. Now, if you can bring more companies into compliance, you've got the bedrock of probably a world-beating ETS. And that's what we're trying to incentivize through private sector, through retail engagement. So when you talk about retail engagement, ACCC, let's make sure we don't tell people we're something that we're not. And we're not an offset. Let me say that again. BetaCarbon is not an offset, but BetaCarbon will have a mechanism for you to offset with the BetaCarbon token in the future. So, this is around really planning for the future by you have to have some imagination around what the regulation is going to look like. Now, in the last 3 or 4 months, we've been given I guess a little bit of an opening as to what it's going to look like. It's a pretty good set of regulations that I think Andrew Bragg's come up with. Almost Goldilocks-like, I think, as long as we can prosecute it with the resource being, with ASIC being resourced and Treasury being resourced adequately, because we've seen situations where ASIC has put new regimes in, and frankly, it's taken too long to even implement them, and they've pulled back on them. We saw that with the foreign service providers license. So we really want to see regulation, but we want to make sure that it's resourced correctly. Not rushed through. So I think on one hand, if I look at the carbon market, you've got that, you've got ACCC, you've got ASIC and regulation and how they're going to prosecute what the Treasury tells them to do. So there's a lot of different parts to this that all need to be considered. It requires some imagination. So we've set ourselves up for regulation. Not for anything else. We are ready to be regulated. So when they make us tick that box, okay, great, give us the forms, we're ready to go. And I think as long as you come into it like that, you don't have any sticker shock when it comes in.
I wanted to talk as well a little bit about just how you navigate that type of environment, because I can imagine it must be quite frustrating. You've putting everything on the line. You've kind of given up a really great job and career to go and do this. And now you're pioneering something that a lot of the components don't exist. How do you kind of manage, I guess, your frustrations and kind of keep yourself just, focused and not let, the kind of 2-paced or 3-paced environment of dealing with regulators, having a startup, technology evolving, governments changing, all of that stuff, or potentially changing. How do you manage those frustrations, Guy?
First of all, by not replying to any emails for an hour is usually the best way to do it.
Yeah, it's a good tip actually, because it usually begins with an F, right?
And I think the other thing is surrounding yourself with people who help you with the things you don't necessarily understand why the perspective is as it is, because this is always about perspectives and people's points of view. And if you put yourself in their shoes and you go, okay, well, why does it take 6 months to open an Australian National Register account? It's probably because it's the same 6 to 8 people that have been doing it for the last 5 years while no one cared about carbon. And now you've got this influx of people coming in. Okay, so that's why nothing's moving there. Fine. Okay, step back from it. It's not going to change because I want it to change. Control the things you can control, and make sure that there's something else to do in the meantime, because if you go into this thinking everyone's going to move as quick as you want it to move, you will fail. You've got to make sure that, and if we've gone from 3 people to 14 people in the last 3 or 4 months, and we need to make sure that those people understand when they come in what they need to be doing with their spare time. So it's about setting deliverables, talking about the pipeline, what needs to be done now. So even getting our AFSL, we know that over COVID, everyone was coming up with business ideas. Everyone wanted an AFSL, and no one's really got a carbon derivatives AFSL out there. So to even get one was something we had to conceive really early on in the piece, and work with the right people to make sure that it was understood why we needed this thing and why it's important to the overall project and why it's important. And the beauty of this is when we talk about why it's important, it's because it's your environment. And every time we do that, actually, we get a response back from regulators or whoever it is that they understand we're trying to do good. And when you try and do good things generally will come back on the other side of it. Now, time is something that none of us have enough of. So it's especially as we get older, Dexter, easy for my son, but it's really about surrounding yourself with different levels of patience in your team.
I wanted to ask you about that because I think we talked about your son, and quite rightly praised that kind of energy and lack of fear. But on the flip side, that can often get you into trouble if it's not tempered with patience and insight. And as you said, kind of empathy and understanding, and trying to understand, hey, how do we bring people together to make this happen? What have you kind of seen, having those kind of dynamics and bringing that to the table as to the benefits of maybe having kind of older, wiser heads, as well as the kind of youth and the energy?
Yeah, look, there's not that much youth and energy. It was Jules really to start with. So our average age looked okay, but it was really, between him and I. And then we had, David come in August, September kind of zone, and then you had the next sort of layer down. So we've got Natalie, who's 27, but she acts more like a 45-year-old. Frankly, if you met her and spoke to her, you'd go, "You're not 27." And sometimes I sound 23. So it really is a balance. It's a balance between making sure that the person. It's really not about age. It's about personality. What is that personality bringing? And then also, I think one of the biggest things to really sort of bring into it was make sure people can speak up. That was always hammered into us at HSBC because that's what they wanted. Now, did it happen? Could have happened more than it did. Was it improving? Yes, it was improving. Do I have the opportunity to embed that from the onset at BetaCarbon? Yes. Will I? Yes. Am I? Yes. So these are things which, I really do care about everyone being heard, especially around product. What do I know about what a 25-year-old wants? What do I know? Don't have a clue. I was sitting next to my 9-year-old this morning. He's talking about spawning blocks. It's a whole new language. I don't understand it. Yeah. I understand markets and I understand doing good.
Well, I think this is a point. I talk about this all the time on the podcast. My 9-year-old boy, Roblox, he's a native to digital currencies, right? And he keeps complaining about why he can't just shift his digital currencies between games, and he's got a bank account, and there's 3 or 4 different transactions that have to happen before you can buy some Robux. So I think we keep using this term native, but look, it's not native. It's what they demand. They demand to be able to transact through a wallet, right? And for it to be seamless, and that, their BetaCarbon credits, they should be able to just automatically exchange them for Roblox if that's what they want to do, right? And be able to offset the trades.
Well, we've discussed that as a way in. Why aren't these things being sold? Subway Surfers. It's actually a game I like and play on my phone. Why couldn't those stars be kilos of carbon? That that maybe you pay to play or whatever it was. So there is so many ways to figure this in from a digital perspective that it lend itself to that naturally. But you're right. How we figure this product is really about how we use the younger people in our teams or who want to be part of our project to the best effect. Yeah, it's a really important point.
One of the other parts around the consumer piece, and I'm speaking from a personal perspective here, Guy. We've got solar. Look, we kind of would love to, be at the point where we're completely off the grid. I got no chance of getting an electric vehicle in the next 12 months in Australia.
It's expensive.
Right? It's not just that. It's very inaccessible, right? Like you kind of 12-month wait list for a Tesla, or, we've got a few of those coming into the market. It's very hard for an Australian to feel that they can have some form of impact or voice. We've got two governments that really have no policies around green energy. And we're coming into an election and they're all avoiding it because, we all know why, right? It's like a lot of the funding, you kind of question where it comes from. So as an Australian who wants to do good by and play their part, it feels empowering that all of a sudden, rather than voting I feel like I would have more voice getting a BetaCarbon wallet, right? And having a say there. Is that kind of the right premise? Have I got the right kind of premise of what you're doing?
Absolutely. And look, we feel exactly the same way. There is no real call to action, and if it was, you had to give your money away. It doesn't make sense. We've all made a lot of money raping the planet for the last 40 years, 50 years. Everyone. We've had lower costs, we've had globalization. That has turned. That switch has flicked. What blockchains allowed us to do is, how often do corporates get ahead of retail and then give retail a bum steer? This is actually retail get ahead of corporates to make corporates do the right thing, because the government's not getting them to do the right thing. And I think a lot of corporates are on board already, but there's a lot of chitter chatter. There's a lot of ads about 2050, and for me, they shouldn't be allowed. If you're not tell us what you're doing now. Make sure that there's a lot of articles around people planning to do projects. No. If you haven't broken ground, you don't get to speak, and that's why this asset class for us was so important. It's already done the work. Now, for me, can I lay this down? This is what it feels like to me. This is how I explained it to my mother. I said, Mum, it's like you have a really big Hessian bag and you fill it with lots of Coke cans, and you spent the whole day filling it up. And there was a big polluter at the end of the beach, and he said he'd give you $35 for the bag. And you thought about it, and if you took the money, he's going to take that bag and dump it back out on the beach. How's that make you feel? Doesn't make me feel very good. But how about this? You take that bag, you fill it up, and Dexter gives you $35 for that bag. And then next year, that bag's worth $40. And Dexter sells it to Dexter's brother or Dexter's friend. And Dexter's friend sells it to someone else. And all of a sudden, what have we done? We've increased the cost of pollution. That will change. We're definitely not going to offset our way out of this. It's impossible. But this is a mechanism for call to action. So your point around, I wish I could do something more, that's what we've delivered. We've delivered you a tool that does not exist today. And I implore people to investigate it. I implore people to look at other ways you can create a call to action beyond simply philanthropy, because we only have so much money to give away.
Yeah. No, it's as I keep saying, very much a pioneering idea, pioneering concept. Australia, it doesn't have the greatest reputation from an investment perspective of investing in, kind of new ideas. It tends to be more sure bets. We're seeing that change now, and we're starting to see, bigger risks being taken. How have you found the journey and the experience of going out to investors with this concept? How receptive have they been? And hey, have you had people kind of put their money where their mouth is and back you as well?
Yeah. I think when you're doing good and you provide profit for purpose, people want to listen.
Yeah.
Because they understand, again, that people are only willing to give away so much. So when we finished a funding round recently. It was our second funding round. We did an early funding round in the first couple of months. My son got in touch with one of my good friends, and they put together a small round. So we've raised about 4.1 million to date.
Great. Excellent.
And I think
that used to be a Series A, right? Like it's remarkable. Yeah.
Again, I think people, if you actually look at this asset class, I don't know if you've ever noticed, but there's no managed investment schemes for carbon in Australia. Now, there are real reasons around that, and we've overcome that hurdle for people to participate in this market. And that's what's the kicker here. So it's not like there is another option for people to participate in the Australian carbon market if you don't have 6 months and $500,000. And it's a really important market. And we saw it with the real estate market when the internet came out. All of a sudden, blocks of land in Tasmania, which were going for 20 grand, went for 200 grand because of transparency. We had a conversation with various incumbents in the carbon market, and they were saying, oh, you're going to ruin the integrity of the market. I said, there's no transparency. How can there be integrity without transparency? So, they use some choice words, but when you're 47, you can have a pretty good debate about this stuff. And I think even the other beautiful thing about this, so we talk about call to action and we talk about these other pieces, I haven't found any real people who want to compete. They all want to collaborate, which is fantastic. Isn't what, in any business to be able to say that, and I'm sure it will come, Dexter, but honestly, people want to partner. They want to find a way to do more good. They want to be part of that narrative. And it's a very limited way to get involved. And BetaCarbon has designs around not just tokens. We want to be the decentralized ESG marketplace globally. That's what we see. If you think about NFTs, we went back to that before. If you think about what that is, I've been doing my work around it, and there's a couple of, I've got a few bids on some $60 NFTs, which I just like from a design perspective. But my God, it's like there's millions. What am I going to do? There's like it's literally what happens to show up in front of me is what I'm going to get. Now, the same thing with investment in the environment. It'll start looking very, very messy in terms of what's out there and what's environment and what's standard investment and this kind of thing. Now, if we really set our framework around decentralized ESG involvement, we're talking about grassroots, introduction of tokenization, democratization, giving people access, call to action. And that's what BetaCarbon really wants to focus itself on. So we want to collaborate with other projects. We want to be able to tokenize it for them. We have the ability to create new smart contracts that they'll need. So we'll start looking like very, very soon, we'll start looking like a software company that has great trading prowess in the background. We want to build derivative solutions for building industry. Even that is something which, we've had lunches with big infrastructure people, and the concept of what is net zero in their space is still being figured out. And if we don't help them figure it out with product, nothing gets done. We don't change the way we produce titanium. We don't change the way we produce steel, concrete, lumber. All these things need to change at their core for us to even have a chance to get there.
And financial services. I wanted to talk a little bit more about kind of Australia and particularly Australian fintech kind of scene. I mean, when you take that global experience and then you kind of look at your experience that you've had over the last 18 months or so, getting really involved in the Aussie fintech scene, what's your kind of sense as to where it's at right now, and what are some of the things that you like, and what are some of the things you think we need to improve on?
Look, I think having gone to blockchain conferences for the past couple of weeks, there's been a few on that. Sitting in there, it's definitely, I've picked up on the mood that there's a lot of Australian nexus in some of these global projects, which is super successful, but they also do go offshore. So when you think about that brain drain that's often considered, it's slowed down. That brain drain has slowed down because of things like the Bragg report, things where we're saying we're in, and this will be a race to who's really in, who can really prosecute this effectively. And when I consider my own experience about going abroad, do I think about changing my headquarter? Do I think these are all things that I have to consider? Bearing in mind, I have to have some imagination around what Australia wants to go. So I even look at the political landscape. If we end up with a parliament which is a hung parliament, where independents are calling the shots, probably great from a carbon perspective, maybe less good from a crypto perspective. So there are so many different things to really figure into that journey around fintech. But clearly, there's also we're seeing a lot of copycats come out in the buy now, pay later space. They were less successful than the pioneers, the people who really went out and said, I'm going to run into this gray area, but I'm going to do it with my clothes on. This is something which we really need to be brave around, but also be measured. So bravery doesn't mean you break the law. Bravery means you look at what your purpose is. You make sure that purpose is doing the right thing by your community, and you step into it. And you step into it with a team of people who are backing you 100%, and you've got to back them 100% as well, because I don't know everything. I don't know near everything. What I know is that this needed to be done, and I stepped into it, and I took a risk by stepping away from HSBC. HSBC backed me by allowing me to step away in the best way that they could. I love the idea that I could potentially go back to HSBC with my product, and it can be part of their proposition. And the only way they were ever going to step into this space is because they know me. So that's where relationships are so important. To think that, one of my biggest frustrations, and you probably feel it a lot too once in a while, is when people only email. They didn't get on the phone. They didn't agitate. They didn't try and have that proper relationship. That's one of my biggest bugbears. So I think when we think about young teams, what they need to do, they have to remember that we are social beasts, and that social part of it can't be texted away. You really do need to step out of their comfort zone. A lot of the time is sitting behind a screen. And if I could be having this in a hall with you, I'd prefer to do that. And I don't think that ever goes away. And it's worth its weight in gold.
That's a really interesting point that you raised there, Guy, about HSBC and you kind of moving on and potentially there being an opportunity to collaborate in the future. Seen with a lot of corporate VC funds, particularly the big four banks, is that whilst they're doing a good job, I do wonder whether actually investing in employees and letting them just go off out of the constraints of that environment to build something, and then if it works, to kind of get back together in the future, whether that's another way that we could potentially invest in ideas like this where you're really pioneering something.
Yeah, I think it's a good point, and I broadly hypothesize this with the bank. Clearly, they've taken a view around cryptocurrencies quite early on, and they've stuck to that for the time being, which is fine. That's their prerogative. I would suggest that it absolutely needs to be carved out without any management oversight almost at all. It needs to be, but there are some amazing people in these institutions which are somewhat institutionalized, and that's no fault of anyone. It's a massive. It's got 200,000 employees. It is a town. It's a city. And when you think about that, you can get lost in the weeds. And even some of the younger people that come in are amazing. So is there an opportunity to try and enlist talent from that group? 100%. Is there a mechanism to do it yet? No. Has anyone really cracked it globally? HSBC, I believe in the past has had an incubator where they've in London. I think its bread and butter is kind of in Asia. So when we think about what that might look like, there's probably better jurisdictions to do it out of in terms of young talent. But they know what they are. And, I think on this journey, clearly one of the biggest things that could derail me is actually stepping outside my rails. I've had an example of something which came to me was a government entity out of the Philippines came to me and said, can you help us tokenize coconut carbon credits? And frankly, beautiful that they wanted to come to me, but completely not my bag. And maybe that's what this looks like to them at this point of their journey. So I understand it, but coming to them with a fully formed product, be it, at a higher valuation, is something that they would need. They need that surety that it's gone through all the vetting that's not what they wanted to do. Yeah, look, it's a good question, and we're really hyper-focused on the next quarter. Our OKRs for that are really around an elegant launch of the product, and making sure that we create an experience which is as good as it can be. From a standing start, we've come quite far. We're moving at pace. We're hiring quickly. Getting those teams to run at the right cadence is essential. You can expect that you will have possibly the simplest exchange on the planet, because we're only doing one currency for BetaCarbon. That will get more complex with another token, and we really want to figure that around a nature-based voluntary carbon token, because people love the ocean, they love trees, they want to be part of that, and we want to deliver the highest quality product at the top of those ranges the whole time. We're not interested in delivering a $2 carbon credit. We think it has no bearing or value on the price of global carbon, which is what we're really trying to affect here. We want to dominate the quality aspect of this market. I really see a place for BetaCarbon dominating blue carbon tokens, dominating things that are rare, and having them come into our universe and being the place where people want to come and trade those. I love the idea that we create arbitrage markets between carbon markets globally, which currently can't really be arbitraged. And that's the beauty of blockchain, that simply doesn't, because that's the tail that wags the dog. So BetaCarbon has the potential to actually drive policy here by showing that actually by opening this thing up, it created opportunities, not the opposite. And I think the global UN meetings that we have, the COPs, it's clear we want to get there, but it's also clear that bureaucracy gets in the way all the time. So
I think that's a super important point that you raised there. And, sorry to interrupt, but I think it's really important around policy and how you affect it. It's not by doing an opinion piece in the AFR, having a go at government. It's actually building something that they can see. I can take this to my voters, and it's going to make me look good. It's a really simple premise, right? But it actually works. And I think that's a really important insight that you've raised there, because I think too often we put pressure on government by just complaining and making noise, not actually building something for them then to go, oh, let me take this to people and discuss it.
Yeah. And look, of all the places in the world to start this project, it was here. It makes the most sense. There's a lot to do. But even if we look at Europe, the price of carbon in Europe went up to $140 odd. Do they need my help to get the price of carbon up? No, they're doing just fine on their own. But for me, it creates an amazing juxtaposition to our price, which, yes, at the moment, it's not tradable in the traditional markets. My end goal is to make it so that people can have a choice as to what units of carbon they want to buy, to really affect the way. Again, the primary purpose here is to get price to the point where technology can meet the needs of decarbonisation.
So do you have a wait list for the launch at all? Or is there any way people can go and find out more information, Guy?
Yeah, so at the moment you can actually buy it. There is on Uniswap. If you look up BetaCarbon on Etherscan and head through, you'll be able to get to the Uniswap. You can also click through if you hit buy now or trade now on our screen. There'll be two ways to buy it. Now, that's a decentralized method of purchasing it. You could also buy it through a centralized method through BetaCarbon. If you're in Australia, then that would be a process where at the moment we're accepting anyone over $10,000, and we've had a pretty good take up in the time to launch up to that point. After that, you'll be able to invest. There'll be no minimum.
Right.
We really want mass participation.
Yeah.
So we really figure in 6 weeks' time, you should be able to, simply with your driver's license or your Medicare card, come in, open your account, and get started on that journey. Just to give you a sense of what you use, Australian uses about 15 tons per capita. That's a lot. When you think about Europe, they're doing between 4 and 6 tons a year. That price, for 15 tons, it's $450. I'm not asking you to give it away. You're investing $450 in participation of the carbon market. Now, that could be worth, and would have worth $900 only a month ago before the government changed the movement from their purchasing to the private sector. There'll be other things which are figured in, which will also change the price on the positive as well, not just the negative. And I think that the will of the community is clear that people want this market. There's no other way to participate in this transition than these products, and no one's really bought them yet because they haven't had access, and that changed with us.
Got some seriously talented people tune into this show, and one of the common denominators that I've found of anybody that's kind of successful in my network, particularly in fintech, is the thing that drives them more than anything is to build something and create a legacy. Couldn't think of anything kind of more important of building a legacy than what you're doing, Guy. So if people are interested in working with you, what's the best way for them to get in touch?
Oh, look, I think you can hit the contact through the website. You can also we're looking at a young guy who's on a reverse inquiry basis. They wanted to buy some tokens. We're probably he doesn't know, but he might after this podcast. We're quite interested in hiring him. And again, that's how I got my first gig, is by agitating, because I cared enough to agitate. So if you're young and you want to have a crack and you want to feel good about doing it, you'll find a way to get in touch with me. I don't want to make it too easy, Dexter, or else... Mate,
it's not hard. You got a LinkedIn profile, right? Awesome. Well, Guy, it's been fantastic to have you on the show. Look, I mean, it's incredible what you're doing. We'll be getting involved. We'll be promoting this as much as we can. And hopefully our listeners will get on board as well. And look, it's just, I feel, it's kind of, as I mentioned earlier, to feel empowered that you can do something about a problem that I think a lot of us just feel helpless about. Congrats to you and the whole team on what you're doing. I'm really pleased to be able to give you this platform to share more about it, because I think obviously the more people that know about it, the better for everybody.
Yeah, thanks, Dexter. And look, I think I'll leave you with this. Obviously, going through this process, we've had to deal with a lot of people with regards to procurement and all sorts of different parts to the journey. And over 50% of those conversations have led to the person who we're trying to buy something from buying BetaCarbon from us. So I think people are feeling it across the board, and we look forward to making a difference. Thanks very much.
And you can connect with me, Dexter Cousins, on LinkedIn and Twitter. For early access to new shows and updates on the latest exclusive opportunities through Tier 1 People, subscribe to our newsletter by visiting the Fintech Chatter page on LinkedIn. Thanks for listening. If you enjoyed today's show, remember to press follow on your favorite podcast player, and please consider leaving us a review. It really does help me in bringing in great guests and help fintech fans like you discover the show. Fintech Chatter is presented by Tier 1 People, leaders in fintech executive search. We'll help you launch, scale, and innovate by delivering world-class talent. And you can find out more at tier1people.com. Until the next episode, stay safe